Good afternoon, preppers. Welcome to Goshen Prepping. Yes, the banking fiasco continues. And even though we actually haven't seen any more banks crash in the last few days, that doesn't mean it's out of the news. In fact, experts are showing it's going to get far worse and start very soon getting far worse. Nearly 200 banks teeter as Fed seeks inflation balance and rate hike risks more insolvency. Fears that another interest rate hike will hasten more bank failures will loom over the Federal Reserve. A study found that nearly 200 banks are at risk of the same sort of collapse as Silicon Valley. And we've mentioned this before, because it's not simply people pulling money out, taking their deposits out of the bank that causes crashes. It's this kind of talk, this kind of thought. The Fed's introduction of more hikes or even stopping the hikes will actually alarm people and make it so the people, and even more so the big corporations who hold their money in there, will start pulling it out. And next we'll see a whole bunch more banks collapsing. And a great example of this, which just happened, Credit Suisse $3.2 billion cut price sale signals an ongoing crisis that could expose unicorn fintechs. It's a fire sale of Credit Suisse to UPS, putting the banking world on high alert. And the thing is, when the Great Depression happened and they saw banks failing, this was like practically unprecedented. There's always been bank failures, but they'd never seen it on such a massive scale, which actually pushed them into the Great Depression. In fact, the first 2 years of the Great Depression, they thought they were just in a recession. And it's funny because today people they're going, la, 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 it's not happening. They're pretending we're not even in a recession. We're clearly in a recession now. But when they said that the Depression started from 1929 up until 1931, they thought they were just in a recession. Bank failures too. So we actually have history to look at to see how all this works and see how it's showing the path in which we're heading. And what is that path? Banks are collapsing. Are we heading toward the new era of CBDCs? So if you didn't know, that is a central bank digital currency. Right now we have these currencies, little greenbacks, which, I don't agree with this in the first place. But, when it comes to credit and when it comes to issues with your banks, understand that if you use a credit card to pay instead of cash, that place you buy stuff from, like Walmart, they actually are getting less money for their items if they're taking a credit card, and the banks make profit every single time you swipe. Even if you have a great credit card, which gives you bonus points, the banks are still getting stronger and stronger. So it's funny how the Feds are talking about a CBDC, taking away these, see ya, and now instead actually turning everything into digital. And it's believed that all these banks crashing, that is the catalyst, the push, and that's where we're heading to. So what is happening in the banking industry? Are we heading toward a new era of central bank digital currency? Very well might be. Despite the risks, several countries are already experimenting with it. China is leading the way. And it's interesting, in China, if you want to make a purchase, practically everybody uses their cell phone for their purchase for everything there. Actually carrying currency and such is not really happening much anymore. And people are saying, in America, what are we worried about? Everything's kind of digital anyway. But at least right now we have the choice of actually using cash. But as more and more people aren't using cash anymore, which is funny because in the pandemic, we don't take cash right now. It was simply just a precursor for where we are today in a situation where cash, it's on its way out. And this website shows the risks when it comes to CBDCs. First, the government controls lack of financial privacy. All transactions will be recorded and tracked. Vulnerability to cyber attacks. That is a very real threat, by the way. Possibility of centralization, have the potential to be centralized, which means the government would have complete control over currency. They kind of do anyway. Well, under the watchdog of the Federal Reserve anyway. Risk of inflation could be used as a tool for the government to print more money, which leads to more inflation. Which they do that right now anyway, but I guess it would be easier, wouldn't it? Dependence on the CBDCs would make individuals dependent on the government for their financial transactions. So much for a free market economy. It's kind of disappearing, isn't it? And we'll end with this one, reduction in financial innovation. It could lead to a reduction in financial innovation since they're controlled by the government. That is called socialism. And right now, in our free market economy, as how free it really is, it's difficult to say. But right now, if you actually have an idea, an innovation, go for it. You'll need some capital, you'll need some financing for it, but you can actually do really well with whatever your innovation is. But if all the finances now are controlled by the government completely, well, the innovation, there's not really any motivation for that anymore, for the fact that the government controls everything. That's what we see in socialism and communist countries, is the innovation only comes from the government, not from the people themselves. Very interesting how all these things are happening around the world with communism, socialism, and all those uprisings. And now we see possibly our money turning into CBDCs. These bank failures, it looks like they're just a catalyst for that. But I'd like to see your opinion. You can put it in the comments below. Thank you for watching.